Get ready to enter a brave new world with your host, Vasant Dar.
Brave New World is supported by the Center for Data Science, or CDS, at NYU. If your organization is interested in engaging with CDS through student projects, please email cdsindustry@nyu.edu. For more color on the podcast and additional commentary, please subscribe to our newsletter at vasantdar.substack.com. Hello, and welcome to Brave New World. My guest today is Mohit Satyanand, fellow world hiker and mountain lover, investor, and a policy and economy analyst. He's a rolling stone who gathers moss along the way, thanks to his sticky fingers. I'm curious to get Mohit's take on how India stacks up as an investment opportunity given its infrastructure, both digital and physical, its educational system, public health, the government, and more. Mohit, welcome to Brave New World. I am delighted to have you on the show.
Likewise, Vasant, and I don't know what my qualifications are for being here. You've had luminaries on your show, so happy to be here.
Well, you're very modest, but great to be here. Great to be in India and do this face to face. I usually do these on the internet, but this is so much better to do it like this. Plus, I don't need to worry about the technology failing. So, before we get started, and there's a number of areas I want to talk to you about, including investing and the economy, which is of interest to everyone around the globe, and also sort of India-specific questions about the state of the art, I guess, of the governance and then sort of the balance of power between the Indian state and the people, which is always of interest to me. And I notice this every time I come to India. What's changed. So, I want to get into those kinds of things with you. But before we do that, just please tell us a little bit more about yourself and your journey.
It's been a series of journeys, actually. We were just talking about how you're a lifer at NYU, and I'm a lifer at nothing. I've been a rolling stone with some elements of continuity. So, career-wise, I studied economics at Delhi School of Economics, joined Hindustan Lever as a management trainee, realized pretty early that I was a misfit in working in a large corporation. Within 4 years, I was running a startup at a time when the word didn't exist with someone else's money. Ended up creating the first successful snack food brand in India.
Which one was that?
It was called Cracks. As turnovers and so on went, it was modest. The family that funded the business exited it for something like about 1,500 crores 3 or 4 years ago. So it wasn't a unicorn by any chance, but I think there were lots of missed opportunities on the way. But I got out of there as well within about 5 years, long before it could acquire significant scale, because my interests were pulling me elsewhere. I'd also realized that contrary to my sentiments when I finished college, I didn't really need a lot of money, and I think all of my other interests were pulling me away from being wedded to the business world. And I was sort of in my early 30s now, and I had the equivalent of a gap year.
It's so common these days, isn't it?
Yeah, but about 10 years later.
Yeah.
And that gap year became several gap years, during which I partly worked and I largely played, and found that work and play can actually go together, and work and money don't necessarily need to go hand in hand. And so I traveled in the mountains. I deepened my love for the mountains. I worked with musicians, not being a musician myself. Created a very, very successful, almost iconic platform for independent music in Delhi in the early 90s called Friends of Music. Set up a program to work with street children. Tried my hand at advertising, failed miserably. Worked in film production, documentary films, working with NGOs, etc. Got very involved with the entire NGO sector. And so there was a lot of churn for 4 or 5 years, which finally resulted in a couple of very concrete things. One was that by the early 90s, I was quite clear that I was going to spend a significant part of my life in the mountains. So I bought land, I'd set up a home, and eventually my wife and I ended up spending 6 or 7 years there. The second was the work that I began with street children, ended up gradually morphing along the way, but still with that seed intact of becoming probably the most successful program with street and working children in India, with a couple of collaborations along the way called the Salam Balak Trust, which now works with 5,000 kids a year, has some 7 permanent homes for them in the Delhi NCR region. But the success of that had very little to do with me. We were just the spark that got it going and sustained it for
So
4 or
is
5
this primarily orphans or low
No, no,
means
no, 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 no.
children?
These are
Or
kids who've run away from
I see.
home, and kids who got cliched stories, but all those cliches are true. Mother died, stepmother who was cruel, got separated from parents at a mela, alcoholic father, all of those. And the third thing was that the work with musicians and that very successful music platform sort of got integrated into the by then moderately successful practice that we had in the area of television software production. And the company that I founded with my partner then moved into the performing arts solely and away from where we began, which was film production, and became an extraordinarily successful company, not financially, but in terms of the events that it created, called Teamwork Arts, and Teamwork promoted and runs the Jaipur Literature Festival, which now is not just in India, but in several locations around the world. So all of these things sort of emerged from a period of personal churn for me. They all took on a life of their own, and a life that was a lot richer when I sort of exited, which speaks very highly to my abilities as a manager.
Richer, you mean richer than when you were doing it?
Exactly, exactly.
Yeah.
And I achieved a kind of nirvana which I always wanted, which was to live close to nature in the mountains at the age of 40. And initially we thought it was going to be a 1-year existence, but it ended up being 6 years. So we had a 6-year-long honeymoon. My wife Premila, whom you knew as a young professional in New York, we had our only child while we were living there. We brought him up for 5 years in that very, very, very idyllic setting, and only came back when my views on his education differed from those of Premila. I thought I would homeschool him till he was 11 or 12, and she didn't know where this maverick husband of hers was going to take her son. And so we moved back to the city and put him into the mainstream. So in 2003, as a 47-year-old who hadn't worked for 7 years, life was wide open all over again. And I decided that I wasn't going to go back to either to running Teamwork, which by then was being run by Sanjoy, and I certainly wasn't going to take up a full-time job. So I threw myself at the mercies of the cosmos and began dabbling once again in whatever the city would throw at me. And what it's done primarily is 2003 to 2014 and continuing today, largely public market investing, stock markets, Indian equities. 2005 to 2011-12, don't shoot me if the dates are wrong, I was consulting editor for India's preeminent personal finance magazine, Outlook Money, and looked after the investing section. So I was actually a paid journalist for those 6 or 7 years. Some amount of work as a board member, advisor to mid-sized corporates, and most recently, and in some ways most enrichingly, as an angel investor in startups.
That's quite a varied journey.
It is. It's many journeys.
Yeah. No, it's interesting that you sort of got into markets and investing, sort of midlife. Although I should revise that. I was watching Deepak Chopra on Oprah Winfrey in 93. He looks like a kid. And he's saying, the human lifespan is supposed to be 130 years. So you approach mid-age at 70. So I thought that was interesting.
We haven't yet got there.
Yeah, we're not there yet. So, but you got into in your 40s, and, I got into algorithmic investing myself in my late 30s. After being a professor, I sort of, spent several years on Wall Street, just building AI algorithms for investing. Let's talk about that a little bit more, because this is a subject of general interest to everyone. And I teach a course on systematic investing at Stern. I've been teaching it for many years now. I spend a lot of time, talking about the fallibilities of humans and the strengths as well, and similarly for algorithms. And in general, I sort of have a fairly dim view of humans when it comes to making investment decisions. But, I have my heroes, who I believe sort of have something, that there's something special about how they look at markets. And, in my conversations with several of my guests, including Phil Tetlock, I realized that there's something special about this minority of human beings that tend to be good at analyzing markets as opposed to the rest of us, including myself, who fall prey to our emotions or to like very short-term, events in the market and things like that. And prior to our conversation, we were just chatting outside about, how you got into it. And I asked you, how did you make out like a bandit, when you did?
Well, firstly, I didn't make out like a bandit. I did moderately well. How I got into it was actually partly a personal story, in the sense that my father, who was not a rich man, but reasonably well-to-do executive, had a modest portfolio. And I was never associated with his investing. We didn't get involved in each other's financial affairs. But in 2002, 2003, around the time that I was returning to Delhi, he was in his early 80s and suddenly beginning to lose some of his faculties. And my mother one day saw him struggling over filing his income tax returns and not being able to figure out long-term capital gains versus short-term capital gains, or something very, very basic like that. And he had a very sharp mathematical mind, and this was very disturbing to see. And so very tentatively, because I didn't want to offend his own self-esteem, I started helping him. And within very, very short order, he sort of let go completely. He said, why don't you just take it over? Which was very surprising to a lot of people, because he was so much in command of everything. But what we all realized was that he was not a control freak. He just did what needed to be done, and he was very happy to let go. Talked to several of my friends, and those who inherited businesses from their fathers or taken over their or tried to take over the family finances. Has always been ego battles, stress. We didn't have 1 second of stress. It was, as of 12:03 and 30 seconds, you are now in charge, and that was the end of it. And so in a sense, I was in at the deep end being a reasonably successful pool of equity investments. There was also a lot of other stuff, the legacy of government-controlled financial systems. So there was national savings certificates, LIC, post office, commercial real estate. It was just, I was not surprised he was daunted because he just had too many instruments. So that was number one, having this little nest egg to manage. For my parents, who, my father was on this planet 2016, so there was still a long time. I was always very numerate. So this wasn't very challenging. There was a lot of organizational stuff to do because this was number one. Number two was India was moving from paper-based share certificates to electronic, to DMAT. So we had to make that transition. And so I had to go through all the organizational stuff, which then meant that I had to detail everything. Everything got recorded. Otherwise, I tend to work somewhat haphazardly. But now I had to put everything down on a piece of paper to transit. Thirdly, this was the first time that I was exposed to spreadsheets. I'd never used a spreadsheet till then. And this was a fantastic tool for somebody who loves numbers. And also because we'd just moved back to the city and I wasn't planning to work. I had all the time. So this became a hobby. But most importantly, in 2003, I realized that we were moving into a completely new macroeconomic paradigm, which is that for the first time in my adult life, I was seeing interest rates which were close to zero in real terms. India had always been a capital short economy. And I forget the numbers, but now we were looking at interest rates of 7 and 8% in an economy which had always had inflation of 6-7%, close to zero. And I remember when I first decided to buy an apartment, I took out a housing loan at 17.65%. So this was a massive paradigm change. And from the little economics and finance that I remembered from my days at Delhi School of Economics, this was going to change everything. So combining all of these things, first thing I did was I liquidated all other assets. My father's savings bank accounts, those national savings certificates, the post office, the LIC, insurance, everything. And said, this is what I'm going to do. Put all the money into equities. Now, very easy to manage because I can use a spreadsheet. Now, very easy to negotiate because it's all electronic trading. You don't have to worry about brokers charging you wrong prices. It's all there. You can buy and sell literally at the end of a phone call. Today, you can do it with a click of a button, but at that point, it was still at the end of a phone call. So that's how I got into equities. And because I had all of this time, I guess I picked up a lot of stuff. I'd also had some entrepreneurial experience, so I knew how companies ran. And a few months into this journey, at a dinner party, I met this woman. I'd met her before. We got talking. At the end of it, she said, you understand equities much more than anybody on my team. And she was running India's leading personal finance magazine. Within the constraints of my not wanting to take up a job, not willing to work away from home, we worked it out, and I ran the investing section of the magazine from my home for several years, which only deepened my knowledge. It also gave me access to a small pool of research staff, access to databases, which I may not have been able to afford given the smaller size of my portfolio. And so I picked up knowledge very, very rapidly along the way. The fifth sort of factor, if I've counted them right, was that Beginning about 2000, I started getting interested in economics once again. 77 to 2000, there was little interest in economics. I was mostly in the world of either small businesses or the creative arts. But I started getting back into understanding economics. And I got fascinated by macroeconomics. And in 2000, especially Austrian economics. And from that lens, I could see that we were coming to the end of an unsustainable era of cheap money. And this was leading to overinflated asset prices across the board, most strongly manifested in what was happening in US housing prices. And this was a crash in the making. And now there was some use that I could put this knowledge to. Since nobody was going to pay attention to an op-ed which I wrote because I had no qualification, I could put it to some personal use. And so I started gambling on this. I took short positions in equities. I trimmed down.
So this is when around 2007, 8?
2007,
Mhm.
yeah, 2007. So I did three things. I trimmed the equity portfolio.
So, what's interesting is that there were several kind of tremors in 2007. I remember all the equity long short funds lost money, right? And that was just, people were scratching their heads. These people were supposed to be hedged. They're long short and they're all losing money. And to be fair, it took a while before the bottom really fell off.
Oh, absolutely.
Yeah.
And I was hurting.
So timing is just essential.
No. I was hurting.
Yeah.
I was hurting.
I can imagine.
I lost a lot of money on shorts in 2007. Also, the opportunity losses on my trimmed portfolio, they were also real. But I was sort of coming to the end of my budget for losses when the entire market collapsed. And the losses that I'd made in 7 or 8 months from mid-2007, I think probably May is when I began shorting, were all made up in 3 days in January of 2008. And the rest of 2008 was a party for someone who was short like me. There was also this cash sitting on the sidelines now because I'd liquidated and I could then buy back into the markets at some stage. I didn't get that timing right at all. I waited all through 2009, so there was a huge opportunity lost there. But the third thing that I did was to buy a lot of gold because I was, for the first time in my life, thinking 3 steps ahead. So these markets are going to crash, and what is the reaction of central banks going to be? It's going to be to print lots of money, and what is the impact that printing of money is going to have? It's going to lead to gold prices going up. So I had a good plan in place. I executed it.
Macro 101.
Macro 101. Yeah. Macro 101. And as I said, it worked pretty well, except, I didn't go full out. I risked about 30% of the portfolio, and I didn't buy back in time. Otherwise, I may have made out like a bandit. I did well, but I didn't make out like a bandit.
What's the general takeaway here? Right? Because people ask me this all the time. Hey, Prof, what do you think about? Surely humans have some advantages, in that we can see the long term. On the other hand, timing is excruciatingly difficult. So what's the general takeaway for people who actually do want to make these macro kinds of calls? And especially young people, by the way, right? Because I encourage people to sort of get into investing earlier, sort of the Warren Buffett view of the world, be careful and let it compound, and you'll do a lot better than sort of, trying to make one big bet.
Well, in my case, the one big bet did work.
Yeah.
But if you were making macro calls now, in what seems to become a permanent state of easy money, you could go completely and confoundedly wrong, because I just can't see how this state of affairs is going to change, because every time there's a move towards tighter money, markets go into a tizzy, and central bankers take their foot off the brake. So
Reminds me of the taper tantrum.
absolutely,
Yeah.
absolutely. So, I think that despite having made a lot of money from a good macro call, I think for the average investor, and certainly for myself right now, I think macro is a very bad basis on which to invest, especially in equities. I think that taking the longer historical perspective, which is that if you invest in equities for the long run and you ignore the cyclicality in the economy, which you're probably not qualified to read, and it's not even as though qualifications can get you anywhere, because the market can be irrational for longer than you're solvent, which is again a very well-known sort of phrase, then you're best off taking really long-term calls on equity. And the other lesson of markets...
You mean indices?
Whatever. So firstly on equities, and then of course that raises the question, which is the best way to invest in equities? Are you going to pick stocks yourself? Not for 99% of people. Are you going to find somebody who picks stocks for you? Mathematically, the average portfolio manager is going to underperform.
Right, he or she is going to be part of that 99%.
Right. So that's just basic economics, because there are transaction costs.
Yeah.
And when you pick a portfolio manager, you're only looking in the rearview mirror. Somebody who's done well for the last 10 years may do very badly in the next 10 years. So you end up with saying, let me buy the lowest cost index, which is going to be an ETF typically, or a very, very passive fund. So let me just buy that and sit back. So this is the advice that I give to anybody who asks me about investing, but it's not advice I follow myself. I keep telling myself that I'm going to move there one day, and I've actually laid out on paper the conditions under which I'll move in that direction, which is to passive investing, which is that if 2 years in succession I underperform the Nifty, which is the larger Indian stock market index. That hasn't happened so far. I've underperformed the Nifty a couple of times over the last 20 years, but never 2 years in succession. And on a trendline basis, I continue to outperform the Nifty, and therefore I continue to be a stock picker.
How common is that, by the way? Whenever I come across people who outperform the S&P, I'm very impressed. And my colleague Aswad Damodaran is one of those people. And I asked him once, like how much do you outperform and how much? And he said, well, I do outperform by a few percent. And this is someone who's legendary, for valuation. And he is one of my few sort of, iconic human investors, Warren Buffett, being the other one, and Stanley Druckenmiller, Seth Klarman. I can name a few who just sort of have they just seem to have a system that I can understand. And the system tends to be quite simple. The problem I always have is knowing when to get out. So whenever I engage in discretionary investing, my friend Scott Galloway wrote a great piece about Disney after COVID, about how it was a great bet, and I got in and rode it up, and I just forget, right? I'm not looking. I've got too many other things to do, and I guess a lot of people are like me. And then I looked at it recently, and I'm underwater. So it's like you never know when to get out.
No, I'll unpack that, Vasant. I think firstly, you have a different. I would say your primary problem is a different one, which is that you don't look upon stock market investing as being one of your primary activities, and therefore the fact that you look away is significant. I don't have that problem because it is one of my primary activities. I wouldn't say it's my primary activity, one of my primary activities. The second thing that you sort of is implicit in what you said is the endowment effect. You have a stock, it's done well in the past, you don't want to disturb it. This is
and by the way, I'm sorry to interrupt, but I guess I'm pointing to one of what I regard. Someone said this is a fallacy of investing, which is invest in great companies and just stay the course. And it's a fallacy because if you actually look at the index, right, the turnover is tremendous, right? If you look at the S&P 500 over the last 10 years, I don't know what you probably have only 50% of the companies left in it, right? And that represents the greatest companies in America, right? Now, I'm sure it's true of any economy.
It's true of any economy, and it's why I love investing in the NASDAQ. Because at any given point in time, it represents, the top 100 substantially tech-oriented companies, not exclusively. But even if you look at the top 10 companies there's always a churn, So you have Tesla coming into that, and you have NVIDIA coming into it. So you're not even having to do that work. I mean, it's very difficult for me to do that work in India on what's happening in the global tech world. And so if I look at that part of my portfolio, I've already moved in that direction of being a passive investor. There's a certain portion of my portfolio which is just in the NASDAQ, and I'm just not looking at it. And from an Indian perspective, this is a move I made in 2015. And if I were to look at it compared to my overall portfolio, it's not outperformed. But I look at it as a huge ballast. And if I look at it compared to the Nifty, the major Indian stock index, it's outperformed in comparable currency terms. And in fact, the volatility in Nifty returns has come down a little bit. On average, between 11 and 12% per annum for years and years and years and years. 2015 to now, the NASDAQ has given in rupee terms 15%. And so, indexes are great because they take out from the bottom, they insert from the bottom, and so when companies do really well, they just go to the top of the index. And unlike being stuck with blue chip companies, which are now are really faded blue, which I saw in my father's portfolio in 2003, you're not stuck with anything because that blue chip company is going to account for a lower and lower percentage of that passive vehicle that you take as time goes by. So I think they're great for 99% of people.
I wanted to ask you a little bit more about angel investing, which you got into after you made some dough. So tell us a little bit about that. When did you get into that, and how do you think about it these days, and what kinds of companies are you investing in?
So it's been a great journey, Vasant. A great journey, not just in financial terms, which it has been, but in terms of new learnings. And those new learnings have taken place along several vectors. So to begin at the very beginning, in 2014, around Diwali, which I always, for some, I guess, traditional reason, I sort of sit down without a computer, without a spreadsheet, and just think about money for half an hour. And that November, I suddenly realized that I was bored shitless. My portfolio was doing as well as it had done in any of the intervening years, but I realized that I'd been behaving like an automaton for the last couple of years. I knew...
Sounds like me.
Yeah, I knew which sectors I can invest in. I had very simple sort of yardsticks and shibboleths by which to invest. Portfolio was doing well, but I was not learning anything new, and I was not stretching my mind at all. So that was the first trigger. There are always several triggers, and I think that's great when it's not just one trigger. The second was that I said, I'm kind of approaching 60 now. This was 8 years ago. And the economy is changing very rapidly. And I don't want to, at age 80, if I was to sort of take object lessons from my father, at a time when I'm not being able to take any more decisions, be stuck with a really old portfolio, which is not in tune with what's happening in the larger economy. So how do I need to change my attitude towards investing for it to take into account the new economy that's emerging in India, which is powered by digital technologies, broadly speaking, either deep technology or just technology empowered, So Uber is not primarily technology, but it's powered by technology. Or if you have Zomato delivering your favorite restaurant food to you, it's not primarily digital, but it's digitally empowered. Now, I can't invest in these companies through the stock markets because they're not listed. Many of them, if they're successful, will come to IPO. But by the time they come to IPO, they will be companies which are valued at $1 billion or so. And that's not the stage at which I typically invest in a company, because by then it's well researched. And for me, one of the primary considerations in investing is, do I understand something about this which other people don't? And by the time you have an Uber coming to IPO, everybody is researching into it. The larger investment funds will have 7 people researching that one company. There's no way that I'm going to pick up something which they haven't already picked up. So that means that if I want to be in these companies, I've got to invest in them through private markets. So I've got to jump into this game. So it was entirely a portfolio allocation issue. I need to put some of my money into startups. Otherwise, I'm going to have a very jaded portfolio at the time when I need my money the most.
And are you raising external money as well for this?
No. Only my own money.
Yeah.
Only personal money. Now, I never want to run a fund. I'm too lazy. I don't want to be accountable to anybody. I work from my laptop wherever I am. I don't have an office. I don't even have an accountant. And that's the way I love my life. So it was now a decision to get into this market. And I'm one of those fire, ready, aim kind of persons, not an ready, aim, fire person.
So how's that working out for you?
It's been phenomenal. It's been absolutely phenomenal for reasons which I did not even vaguely anticipate. So let me try and enunciate them. First things first. It has so far been extremely successful in financial terms, in terms of the return on the very, very small amount of capital that I allocated to this, because, it's a nest egg built up over decades. I'm not going to just go out and toss it all into private equity. So I sequestered a very tiny proportion of my net worth to this. But it's done phenomenally well.
So I want to segue into something broader, which is India as an investment opportunity. On the one hand, it's the fastest growing economy, but it's also a massive welfare state with a large bureaucracy, limited social mobility, and a poorly functioning set of institutions that seem to be holding it back. Or am I being unkind?
First, let me say what's right, which takes off from my experience as an investor in startups. What's happened hugely is that a lot of that you have a new entrepreneurial class. The entrepreneurial class when you and I were growing up was those who came from traditional business families, which was largely sort of paralleled our caste system, or those parts of the country which were traditionally mercantilistically oriented. That's changed radically. And secondly, education at the better universities and institutes is now much more democratic. So in my first 30 years working in business, various kinds of business, I could count the number of institutions to which my collaborators had gone. There were from 3 or 4 institutions in Delhi or Bombay. And over the last 7 or 8 years, I am working with startup entrepreneurs from Agra, Tundla, Dhanbad, Chandigarh, Lucknow. Young men largely, unfortunately, very few women, gone to institutions you and I had never heard of when we were growing up. So in that sense, young people are not being inhibited by credentialism. There is still credentialism. If you come from a top IIT and you have an IM degree to back you, you're going to get the top VCs functioning over here to take a much harder look at you. But that's not inhibiting people.
Mm-hmm, mm-hmm. So you're saying the barriers to that have actually
barriers
gone down.
to that have come down vastly. And the fact that you have private capital, which is coming in both from Indian pools of capital as well as global pools of capital flowing through venture capital, is profoundly enabling. Unfortunately, it's still a very nascent ecosystem. And in terms of its ratio to our GDP, it's still not going to move the needle. And every few years, our bureaucracy sort of finds some way to try and dampen this whole system. So we had this angel tax, which reared its head in 2017-18, and then was sort of put to bed and again reared its head. We have this sort of xenophobia which keeps popping up. So sometimes money coming from Singapore is frowned upon, and sometimes money coming from Mauritius is frowned upon. So, these are very, very old cultural issues which we have to deal with. But I think the startup ecosystem is one of the best things that's happening in India. Unfortunately, like any new move, any new wave, it can sometimes get ahead of itself because narratives play a huge role, and that certainly happened in India. And these narratives always coincide with huge floods of easy money, which is what we had up until a year and a half ago, till inflation started rearing its head, and you're in the epicenter of what that does and the attempt to pull back. And so over the last year, we've suddenly seen the mood change from one of exuberance to one of caution in the startup ecosystem, and particularly among the unicorns. So in 2022, India produced 43 unicorns, etc. Many of them have receded. They're not unicorns any longer. And I'm not sure, but I don't think we've had any new unicorn this year. And a lot of entrepreneurs who ignored the basics, which is, are you making more money for every additional unit of whatever it is you're selling? And weren't, and required fresh infusion of capital to keep going, have tanked because that capital is not coming. But I think this is a little bit like the dot-com bust of the turn of the century. It's actually going to set us up for a second wave, which is going to be larger, more prolific, more sustained. So I'm not a doomsayer of what happened over the last couple of years. I think it's phenomenal. But to go back to the larger topic, which is that of
I guess I was sort of referring more to, let me just insert my little bit about, I guess I was referring more to what people call sort of the state capacity.
Yeah.
The capacity of the state to enable this as opposed to be a drag on it.
So the last 3 minutes that I spent talking about the startup ecosystem were only to start this conversation on a positive note, because otherwise I can get dragged into macro and governance despondency, and that doesn't square with the fact that the bulk of my money is invested in India and will continue to be. So I want to make that very clear. I'm not one of those people who is sort of taking all their money out and plonking in the US or elsewhere. I'm not. I'm here to stay. My money's here to stay. I first want to say that India's bureaucracy is not bloated. If you compare the number of public servants across virtually any function that India has per unit of GDP or percentage of population, ours is much lower than elsewhere. In fact, in certain critical areas, we are hugely under-resourced. That includes police, and that includes the justice system. And I would say that these two functions are primary prerequisites for a modern state. And we're grossly under-resourced over there. I think the bureaucracy has not made the transition from being a colonial apparatus to being the custodians and the enforcers of a modern constitution. It is in the nature of bureaucracy, and in fact of any government, to try and consolidate power. And it is the task of civil society to fight back against that. And this is a constant battle. You know, the battle between liberty and power is one of the abiding battles of
indeed
of
how to shackle the Leviathan
of the modern world. And in this tug of war, sometimes it appears as though civil society is winning, and sometimes it appears as though the state is winning. And we actually had a brief period, and I just want to make it very clear here that I am not saying that was a golden period, far from it. But we actually had a brief period where it seemed that parts of the government were more civil society than government. I'm talking about the UPA and the accusations against it. That it was a Jholawala government, and a lot of policy was being written by NGOs who had become an extra constitutional power. It had its upsides, it had its downsides. But so we've actually been in that situation as well. And we're now in a situation which has gone to the absolute opposite extreme, where there's a consolidated, determined effort to delegitimize civil society, except one particular branch of civil society. And right now, there's no question about the fact that the battle between civil society and the state is, firstly, it's an entrenched battle. It's never been as strong. And that it's become a dirty game.
When you say delegitimize civil society, what do you mean?
I mean, for example, NGO has become a bad word. Activist has become a bad word.
You mean anything that questions?
Anything that questions is a bad word. If the press asks questions, we have this obnoxious word, prostitute. It hacks away at one of the accepted pillars of democracy. Words are very powerful. And so everything has been done to delegitimize civil society. If you ask questions when you're in university, then you're an urban noxious. If you ask questions as a press person, you're a prostitute. If you ask questions as an NGO, you're an agent of George Soros or Ford Foundation. So the effort to delegitimize, and simultaneously you have also hacked away. It's not just this government. These are continuums, but the depth to which it goes, that the basics of the justice system, habeas corpus, the need to produce people in court, the need to file an FIR, these have all been taken away. I just have to decide that you are now UAPA. You are guilty of UAPA. I don't need to prove it. No case has got to be filed. You're locked away for 2 years. No judge can ask for you. After 2 years, we'll see. So the battle between civil society and the powers especially in the union government, which most people call the central government, are completely asymmetrical right now. This cannot be good. This cannot be good in terms of creating a just or a creative society. And history is being weaponized. So, in a sense, you're at war with your own history. This, again, we know. This never works out well. So, I don't think that the issue is that the bureaucracy is too large. I think our bureaucracy was never large enough to sustain a modern society, to sustain a proper judicial system.
But maybe it doesn't have anything to do with size. So maybe it isn't bloated. And so maybe size is the wrong way to look at it. But it just doesn't seem to have the capacity
Absolutely.
to enable and to govern.
It does not, and it now does not have the intent either. The intent is to rule and not to govern. And there's a chasm of difference between those two words.
Is that just arrogance?
I think power always breeds arrogance, but I think in the current state there are at least two other issues. The first is that the agenda of this government is a cultural agenda, and it is to create an India which redresses historical wrongs. Those historical wrongs being largely religious and cultural in origin. So having Islamists or having Christians in India is a historical wrong, and it has to be addressed. They all have to assimilate into our idea of Hinduism. And because Hinduism was so broad in its church and encompassed so many different streams, then that does not lend itself to control either. Because this was something that my wife brought home to me very sharply. She's from a different religion. And when she came into our home, and my parents were mildly observant, she sort of couldn't fathom how the Pandit who came to our house was a free agent. And we could have one Pandit one day and another Pandit another day because there's no central authority or bureaucracy which runs it, unlike Christianity.
Mm-hmm.
Where if you belong to a church, it's a completely bureaucratic system, and there's a parish, and the parish decides who your priest is, etc., etc. Point being that the practice of the Hindu religion has in itself been an extremely free, exuberant, almost a market economy. So each Pandit was a free agent, and everybody had their own practices. And you respected one book or one tradition, and I respected another one. This does not lend itself to control. And therefore, you have to sort of try and condense it all into one.
But hang on. So why doesn't all this diversity? I mean, to me, those seem like, and as I ask this question, I'm sort of rethinking it. Right? Are those two things orthogonal, or are they necessarily sort of related? Does diversity imply that it's just too difficult to control? I guess
exactly. And so, if you want to control, then you have to try and reduce diversity. And that's what's happening right now. This, of course, raises the question, and we're moving very far away from the first question which you asked, which is about capacity to govern. So it's not going to work. Diversity is so much part of our nation that the attempt to sort of force it into one cylinder is not going to work. But they're not going to give up for want of trying. And when you try and throttle a culture into one particular funnel, it's going to produce a lot of strife. And that's what we're seeing right now. And in the longer run, it's not going to work. And it's also creating conditions of uncertainty, conditions of breakdown of trust.
I was going to talk about that because there's zero trust in such a system. In fact, I see this sort of generally around. I don't know whether someone's telling me the truth just on a daily basis, right? It's hard to know. I'm not talking about like which way is so-and-so street, but just something more substantive. There just seems to be zero trust sort of at every level.
So we have, there are political economists, empirical ones who study this kind of thing, and there are global trust surveys and so on and so forth. And India has always been a somewhat low trust nation, and I suspect it's becoming lower and lower. If you look at one of the primary instruments of governance, it's the police, right? And trust in the Indian police has always been very, very low, for very good reasons. And I would say that one of the primary tasks of a post-colonial nation would be to bring trust into the police up to much higher levels.
By the way, I'm sorry to interrupt, but something I just remembered, in preparation for this conversation, I was looking at academic literature on trust and lying. What's the amount of lying in different countries? China actually came out of the bottom of that pile, right? Interestingly. And the general takeaway was that people tend to lie more in countries where there's less trust in institutions.
Makes sense.
Which
makes sense. And I think colonialism was a primary factor in low trust, in evasiveness, because it was characterized by exploitation. And as I said, the primary task needs to be to bring about trust in your governance systems. I think we've completely failed. I'm not talking about this current regime. As a nation over 70 years, we have not improved trust in governance. And when this present government came in, this was one of its self-professed mandates. Increase governance, create transparency. I don't see any evidence of it. On the ground, corruption has not changed one whit. I'm talking about working with small and medium entrepreneurs. Corruption has not changed. The time taken to get permissions for buildings has not changed. I think the basic motivation of the bureaucracy, which is to make life difficult for you, that has not changed. Unless you change it, you're not going to have a dynamic society.
So what's the solution, right? India's sort of been a mover in this area of sort of public digital infrastructure, right? There's been, the Aadhaar system was, I guess, on balance has been a tremendous success in many ways in improving efficiency, reducing bleed and all that kind of stuff. And now we've seen sort of more progress in terms of developing, interoperable systems, and it all sounds great. Right?
It is great. It is great.
Yeah.
It works.
Yeah.
For example, fintech companies that I work with, startups, their ease of onboarding customers is phenomenal because it's all available over there.
Right,
If somebody has an Aadhaar, boom,
exactly.
I can onboard him immediately.
So is the larger path here one of actually making the corruption and bureaucracy redundant or unnecessary?
You can never make bureaucracy redundant.
Well, if you have sort of properly designed processes, where stuff is authenticated, verified, and you can sort of remove people who sort of, extort or become extractive.
You can't remove them. I would say that, there's no question about it, that Aadhaar has made life easier on a lot of scores. Absolutely no question about it. But firstly, and this is a relatively, some would say it's a major issue, I would say it's a relatively minor issue, that whenever you have this sort of triumphalism over something which you have achieved, you steamroll the naysayers. And often have these massive leaks of data. And these are not great for trust. So, having said that, on balance, there's no question about the fact that Aadhaar and digital payment systems have hugely improved the efficiency of that whole sector of the economy. But at the end of the day, all of these are built on top of or facilitate stuff that is happening on the ground.
So, what are some of the impediments holding back growth in the economy, which is perhaps one of the largest in terms of labor force globally?
In that regard, we're the largest economy. We're 1.4 billion people, larger than China. But what percentage of our people of working age are engaged in that economy? It's one of the lowest labor force participation rates in the world, Basant. Other nations which have such a low labor force participation rate are countries which are in some kind of civil strife or war-torn. Our labor force participation rate is 40%.
And what explains this?
Lack of opportunity. I'm sitting over here in Delhi. I'm in one of the most economically active parts of this nation. I'm engaged with the startup ecosystem. I'm watching the ticker tape on the national stock exchange.
Right. And the world thinks, views India as booming. It's a growing economy. It's happening,
But I go back every few months to Uttarakhand, and I don't go there as a tourist. I don't go as somebody who is living in a rich people's enclave. I go back to this little cottage that I built 30 years ago in the middle of a small and remote village, and with very deep ties to the village around me. We weren't living in a walled compound, so I know the 30, 40, 50-year history of 20 or 30 families, and have engaged with them deeply over the last 30 years. And what I see around me is lost generations. One completely lost, and the second on its way there. Meaning that when I went there in the early 90s, families who had children who were between 0 and 12, I've seen them go to school. I've seen some of them, a very small percentage of them, go to college. They're now in their late 30s, hitting 40. Such a small percentage of them have become part of the modern India. They have not found their way into that modern India.
To what extent is it because of the limited mobility across caste or class lines, the kind of thing that James Robinson talks about in The Narrow Corridor?
I don't see it like that, Vasant. There's certainly a lot of truth there, and in our correspondence over the last couple of days, you did refer to Robinson, and I did my own little homework and read the chapter in his The Narrow Corridor, referring to India, and I'm very, very underqualified to talk about caste. And I know that it's a profound force in India, so I'm not discounting it at all. But I think to blame all of our ills on the caste system or on the desire to restrict access of people outside the caste system to the modern economy, it's one of our problems, but I don't think that it's a paramount problem. I could be wrong. I ask myself a counter question, which is that if the economy had been growing at 8 or 10% a year from 1950 onwards, would the caste system be a restrictive force on the Indian economy? And my answer is categorically no, because it would have been all hands on board to run this thriving economy. Today, you have an economy where the demand for labor is so restricted that you don't need those people. Therefore, you have educational institutions which turn out largely uneducated people. I mean, this is well documented. I'm not making an egregious statement. You look at the annual State of Education report, it tells you that only 40% of kids in 5th grade can understand a second grade text in their language. I'm not talking about learning English or anything. Only 50% of kids in the 8th grade can do a simple division. So you have, and same thing of our engineering colleges. We have the IITs and so on, that's different. But the average engineering college, Infosys, when it recruits somebody after 4 years or 5 years of studying computers, what's the first thing they do? They put them in their own training institute and train them in coding for 6 months. That means our education system is not delivering, right? Now, there are two ways of looking at this. One way of looking at it is the top-down way, and that's the route that the Koreas and the Chinas and the Taiwans of this world took, which is that you create an excellent primary educational system top-down from the state, so that you then have the raw material for a modern economy. That's one way of looking at it. The other way of looking at it, if you're a free marketeer, is to say, if there was a demand for these people, the supply would get created. You have a little bit of that in India. So you have a lot of private schools. And I'm not talking about the kind of school that I went to. I'm talking about budget private schools. Almost 50% of Indian kids now go to budget private schools rather than go to a free school run by the government, because parents say, we want our kids to be equipped and we can afford to pay 1,000 rupees or 2,000 or 3,000. So we have some of that. But whether you look at it as a symptom or a cause, the fact is that our educational systems are not delivering. Again, I came to economics as a free market person. But if you look at it from the other point of view, which is what is one of the basic deliverables, which is that the government must deliver, it's public health. Depending on the numbers you look at, something like between 60 and 70% of health expenditure in India is out of pocket. It means it's not paid for by the government. It's paid for out of pocket. And people who study rural economies will tell you the primary cause of bankruptcy in rural India is every rural family, except the richest, is one major illness away from bankruptcy.
By the way, that's not too far from the truth in the US either.
I know.
Yeah.
But so it seems as though on all major scores, so we vaguely touched on the judicial system earlier, but it's a fact which all of us know, but very few people get exercised by any longer, which is that India invented a term which is called under trials, right? It's a term that doesn't exist anywhere. It's a word in India. And what is that under trial? Under trial is somebody who's in jail before they have been convicted. Now you have under trials everywhere. But the reason that it's a word in India is that 67% of people, I may have this is not the latest number, maybe off by a couple of percent, but it's probably likely to be higher now than 67% of people in jail have not yet been tried. If that's not a failure of the legal system, what is? So you look at any of the key components that define a successful nation, we're failing on all of them. Only 40% of people of working age are engaged in the economy, as in contributing to it, working. 70% of people in jail have not yet been tried. They're just there pending trial. Your education system doesn't work. And your public health system doesn't work. So, with all of this, the fact that the stock market is doing well, and the fact that I've made good money investing in startups is great for me, but it's not reflecting in the lives of 60% of Indians.
So I'm glad we started on, I'm glad you started on the positives, because I can see how you would have slipped into despondency.
Right. No, I
Rather
refuse to be
quickly.
despondent.
Yeah.
I refuse to be despondent, because finally you vote with your money, and my money is here. But, the fact is, Vasant, that there's nation upon nation across the world where the nation has failed, but a thin elite has succeeded. And that's not the nation I want to leave to the next generation.
Well said.
How concerned are you that that might happen?
Quite. China is now, in classical economic terms, heading into the middle income trap. We are not even remotely there, because we haven't even hit middle income. And there's been nation upon nation, whether in Asia or in Latin America, which you're probably more familiar with because you're geographically closer, which have shown signs of promise and then just languished into decades of financial underperformance, poor governance, civil strife, etc., etc. And in the 70s and 80s, when one was younger and more idealistic and so on and so forth, I used to believe that the NGOs, the non-governmental organization, which in different parts of the world you would call charities or
Right.
non-profits or whatever, would be the saving grace of India. Clearly, one was overstating the case. But they did show the way in many respects. For example, the right to information. It emerged from the NGO sector and would have been a huge check on transparency in the Indian economy. But now it's observed more in the breach than in reality. Because obfuscation is a big tool of governance. And nobody wants it.
Yeah, and I was hoping that, I guess, maybe tech will show the way. But as you've stated quite correctly as well, it's not a silver bullet, right? That it needs to be accompanied by changes in process, just changes in the way we do things.
So on tech, I want to talk about one thing in particular, which is land. The fact that we have 70% of our population in some way dependent on agriculture. If not for their incomes, then certainly for their residence and so on and so forth. And so there's been a lot of talk for at least 25 years now about how digitization is going to improve the quality of land, registration, transactions, etc. Is digitization desirable? Yes, of course it is. Is it going to solve the problem? Absolutely not. Because the problem lies elsewhere. The problem lies in the fact that we don't have any title guarantees. Which means that, and I'll tell you why this is important, it means that when I transfer land to you, we call it a sale of land. We call it a transfer, call it a sale, but actually it's only registration that this transaction has taken place. The title is always subject to dispute, which means that one of my relatives, if I got the land from my great-grandfather, some third cousin of mine could pop up one day and say, I didn't get my fair share of it. And now this goes into dispute. Across the world, transactions need to be complete.
Right. So you're saying it's never settled.
It's
I guess
not settled.
In financial terms.
So digitization is going to solve one part of the problem.
Right.
But the underlying problem
is the process.
Right. And that requires a complete overhaul of the legal system.
Right.
Now, it doesn't mean that digitization doesn't help. The danger is that if you say digitization is a magic bullet and we've solved all these problems, you're glossing over the root problem which remains.
Yeah. No, I can see that, right? I mean, you can digitize everything, but unless you transform the process, then you don't get anything out of it. I've seen this, that you can apply for something online, right? So they've eliminated the trek from you to the physical place, but there's still some guy sitting there approving or rejecting according to an old process. right? So so digitization is kind of just the enabler.
It's a great enabler.
Yeah.
But you've got to get at the root
Yeah.
cause of the problem.
Mohit, I'm not sure where the time went here. I see we've been going for a while. And I usually end by asking my guest for the advice to young people. You've had a very unusual trajectory in life. Would you trust yourself in giving advice to young people?
Yeah, I think so. I think I'll leap off from something which you said earlier, which is that lifespans are huge. Productive lifespans are huge. I like to think that I'm still productive at an age when, so we're both roughly the same age, in our late 60s. Our parents would have been doing very little at this age. And unless something alarming were to pop up, I don't see why I shouldn't be productive for another 15 years. And I started working at 21. So productive lifespans are huge. So don't get locked in by anything that you're doing today. Don't define yourself by who you are today. Define yourself by who you want to be tomorrow and work towards it. Learning has never been as accessible as it is today.
Tell me about it. It's making me redundant as a professor.
Be a lifelong learner. Never seek to define yourself or allow other people to define you by what you're doing today. Continually break boundaries. The second thing that I would like to say is that don't get trapped by lifestyle, because lifestyle isn't nothing. Don't get trapped by installments on your house or installments on your car or having to live the way in which people around you live. Those are completely meaningless. And you run the risk of defining yourself by the car you drive or the colony you live in or the school you send your kids to and so on and so forth. And unless you have so much surplus money that those don't make any difference, they can reduce your flexibility. And, when we talk about material progress, what does that material progress actually come to? It actually comes down to the fact that the basics of life are eminently affordable. And everything on top is superfluous. My 15,000 rupee phone works as well as a 1 lakh rupee Apple. It doesn't have the brand name. But trust me, I can run my life, which is a fairly complex life, off this 15,000 rupee phone. I don't have to change it every year. I could afford a top-of-the-line Mercedes-Benz, but it doesn't help me to have a more fulfilling drive to the highest reaches of the Himalayas, which I've just done in my 7-year-old 10 lakh rupee car. In fact, it might even have inhibited it because I can afford to bust an axle of my 10 lakh rupee car, and I might have been reluctant to do that with a 1 crore car.
It's funny you mentioned this trek to the Himalayas because it reminds me. And by the way, thank you for that. That's great advice to young people. And it actually ties into something that John Sexton said, one of my previous guests. He says, just keep your needs modest, and that'll enable you to do anything you want, right? So that is so true, to not sort of get trapped into this. I need a bigger car, I need a bigger house. That's all great. But I don't think that should define.
And the last thing I'd like to say is something which I sort of rededicated myself to yesterday, and I try and do that every year or two, which is something that I inherited, in a sense, from my grandfather, whom I never met, my mother's father. He said, every man is worth the consideration that you give him. And I find this increasingly a profound statement, because we often see people as instruments. We are in such a hurry to slot them and define them. Whereas there's an entire life, there's an entire history, there's an entire culture behind each individual. And if you bother to uncover it, you're going to emerge richer from it.
Mohit, it's been a pleasure. I've really enjoyed this conversation. So thanks so much for engaging and being here and having this fun conversation.
Thanks so much, Vasant. My pleasure.